I am sipping on water. I also have a little bit of Basil Hayden Stark Rye. There we go. What's this? Kombucha's okay. All right. It's not very nice, Jorge. Futures are rejecting right now. Like, you guys are freaking out when there's like 12 hours before market opens. You guys take things too seriously. I mean, futures could go all the way up to 417 tonight, and in the morning they could be down. We'll see what happens. I have to do a full projection, but alright, so let's jump into it. Turn the music down slightly. There we go. Let's have futures up while we're waiting. So which ticker should we practice on here today? Should we practice on Tesla, Apple, Roku? Tesla's always Futu? Let's just do Tesla. Ah. Let's go on Futu. Yeah, Futu's a decent mover. What's up, Taylor? Alright, so what I'm trying to teach everyone tonight is how to have safe practices, how to scale in and out, how to look for a strike to buy, and then we can get into some theory about account allocation, stop losses, trailing stop losses, how big of a position to take. So that second part of what we're talking about is really not an easy answer for everyone. It's more of what are you comfortable with. So let's say we saw this downtrend break and we saw the retest, and the next day it gaps up right here. So we're like, alright, this is a clear reversal. We're going to take a position, or we're looking to take a position right around here. So we're in the 110 area, let's say 110 to 112 in that area, and then we're going to determine from there what we want to do. But we know we want to get in here. So we go to our Webull account or whatever. I'm just using this because it's easy. So let's pull up Futu here. So I have the options open here. You can see open interest, implied volatility, volume, last price, ask, bid, strike. This is on your call side, and then on your put side the same thing. So you can see the nice options chain here and really determine a lot of data real quick. Now the date is usually, you want to go at the third of the month. Third week of each month is your monthlies. So zoom in. I don't think I can zoom in. Can you not see it? How do I make it bigger? Is it like Control plus? Alt plus? There we go, I figured it out. A little better. A little better now? Alright, so the idea is to try to find something that has high volume, high open interest as much as possible. So you can use an open interest command in the Discord. It's exclamation point OI, and you can find, alright, what date has the highest open interest. So this is telling me 6/18, August 20th, and 12/17, with last Friday having the most, but that's done with, so we have to look for something else. So at the time we probably would have gone with potentially last Friday, but we see volume and OI is high on the 18th, so we go with this one. So we're looking at this. Futu was at 110 at the time, so ideally you would have liked to find something close to the money. So here you're seeing the 150s are the most common. That's extremely far out of the money. I would have probably gone with the 120s. If we're looking at the chart, you can see it's at 124 right now. So these would have been quite nice, the 120s. At the time, these wouldn't have been this much. But you know, depending on your account, you know, you usually want to get at least 2 or 3 of any position you go into. What's up, T1? And the idea is that way you can take profits at a certain point and leave runners. So if you get multiple contracts, typically I like to get a minimum of 5 if I go into any position. Now, if you're a smaller account, getting 5 contracts that cost $1,000 could be your entire account. And I get that. You know, maybe Futu's not the ticker for you then. But the idea is then, let's say you see this uptrend here. So you see your uptrend. You see the uptrend goes right into the 382 golden zone. So you could have scaled out one here if you wanted to take quick profits, and then you could have scaled out your other ones here. Or you could have scaled them, you know, as you saw up here, you could have scaled 2 out here and left 1 if you had 3 as a runner, potentially because you have time. But if you're just doing a day trade, you know, getting a month out like that, you're going to capture good movement, and you can scale in and out pretty easily. And that's the idea. You can scale in too if you want to. So let's say you're not sure of the movement, you get 1 contract, and then as it breaks through this bottom golden zone here and then retest on this doji here, you can buy more and scale in as it goes up, because then you know once it gets out of here it's a full reversal, because this is going to be the zone here with the most resistance. So once you get out of this golden resistance zone, then you can see there's pretty clear skies up, not much resistance on the way up here. So you can use, say, like a VPVR if you want, a volume profile, if you want to see potentially where all the buying and resistance are at. And this is a really nice tool. I don't talk about it much, but you can see here this is going to be resistance, 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 and then major resistance in this area. And as you can see on the chart, based on that, you can see the consolidation. Look at that major resistance. We've been consolidating there forever. So yeah, Biomed, it's tough with if you have long dated contracts. First you want to trust your TA, but if you have an invalidation point and it breaks that on a long dated contract, just sell, and if it gets back over and revalidates, just buy back in. It's better than holding a really large contract for a really long time and losing money. That's not good return on invested capital, ROIC. And return on invested capital is the name of the game. You want to make your capital work for you. So Danny, this is a specific indicator. You're going to go in here and you can go into volume profile, and it's just the visible range one. So that's this one right here. I added it again, and then I customized it a little. So I went in and I changed the row size to 200. Shiro actually, oh, thank you, Mudiyami. Shiro told me to use the better row size. You can get a little bit better even. I mean, even like 250 is not so bad. So I was just told that futures are rejecting pretty good. Yeah, look at that hard rejection on futures. So all of you freaking out, that's a huge red candle. Your puts are going to be fine. Hit the uptrend line and should retest 250 or 415 now. So yeah, it's a cheating way to see support and resistance. Like if you don't like here, you can see the support is right in here, because this is where most people own it. So that's where they're gonna not sell it anymore, or that's where they bought it, you know, vice versa, you know. So that's why you get those support and resistances. So selecting a contract, you always want to, like I said, let's get back to that, scaling in and out. Big, easy, safe. You don't have to, let's say you get the breakout and it's a false breakout. If you only bought one contract, you don't have as much capital at risk. But if you went all in, then you're a little rough. So I believe the yellow and blue is the difference between up and down. So you can see value area up is the blue, that's how many people are buying. Value area down is how many people were selling. Izzy just gave it there for you. I'll pin it for you too. So anyways, futures are looking good if you have puts. So for instance, like on futures, let's say you saw this breakout above here today and you're like, I'm gonna buy, because you're like, alright, this just broke out above resistance right here, because you had this as your resistance right here at 416.65. And so you're like, I'm gonna start scaling in, and then when we get into the golden zone, that's gonna be my target to go add some more. So buy one or two here, and then when it rejects back under, you're not have your whole account in there. You got maybe 5%, you know, something small percentage of your account, and you could just take a quick stop loss and you don't have to worry much. But if you go all in right away, then you got to cut it and you're going to have more losses. It's easier to add on confirmation than to pray and do that. So that's scaling in, and then scaling out is when it starts to hit your price targets. You can start selling them one by one, and if it breaks below your price target and rejects, you could sell the whole thing as a batch. So something to consider. Thanks, Winston. Appreciate that. So let's look at a couple other things here. So account size. Ideally, you would have a large account that you can do 1 to 5% of your account max in each position. You always want to have some cash available for black swan events or for hedging if you need to. So if news comes out, you always want to have something available for news. You never want to go all in. And I know I have an account that I went all in, but that's a fun account. I have other accounts. So one of those things to consider. But safe practices, you want to control no more than 10% in any position. If you have a smaller account, it's possible you might want to go up to 30%. If you're 1,000, 1,500, some of these things can be a little harder when you have a smaller account. Black Swan event is, say, Iraq attacked America, or some new. It's a news event. Something news-wise came out that can't be predicted. So it's a very market-moving news. So maybe Biden's infrastructure plan got canceled and it's no longer in the market. Maybe Powell raises rates that they weren't expecting. So alright, so trailing stop loss. I've talked about this in a couple other videos. I'll show you how a trailing stop loss works. So let's go find the tool. Is it in here? Here we go. Alright, so this is how a trailing stop loss looks. So let's say right here, so this line right here is your entry, and this is your stop loss. So let's say this is like a 10% or 20% trailing stop loss. The way a trailing stop loss works is you enter here on this breakout here of this ascending triangle. So you're like, I'm getting in, I'm going to set a 20% stop loss. Well, as the price goes up, the stop loss goes up with it. So boom, boom, boom. So then when the price comes back down, this doesn't move. So then your stop loss at max, so then as the price comes back down, that stop loss doesn't move. And then boom, you just took your stop loss right there because the price came back down below it and it hit your stop loss, but your stop loss moved from down here to all the way up here, so you should have been profitable. So that is how a trailing stop loss works. And you should always have, if you work during the day and you can't stare at a chart, you should always have a trailing stop loss, in my opinion. Because if news comes out, you can get trapped in a position and you can lose most of your investment. And that's also why I say to get monthly contracts with high open interest and volume, because then you're going to have good liquidity, and you're also going to have less volatility, so your trailing stop loss will work a lot better. You cannot set a trailing stop loss on something with low volume and low open interest, because the bid and ask will fluctuate so much that it'll automatically trail your trailing stop loss. So that's something to consider. I'm going to repeat that because it's very important. Make sure if you use a trailing stop loss that you have a low spread. So the difference between the bid and the ask is very minimal. If you have a low open interest, if there's no bids because there's no one interested, but it's still worth money, it could drop the middle point, which then could trigger your stop loss, and you could lose money even though the position is up because of the way computers calculate those things. So you have to choose high open interest, high volume. Our auto trader we made absolutely has a minimum that it has to have for it to take a position. So because we do use different versions of trailing stop losses with our auto trader currently. Working on more advanced selling options, but start simple, expand from there. So another thing you can do is just set a stop loss. So you can have it where, let's say you're like, all right, I'm okay with this being a 50% loss. So I don't need it to be a trailing stop loss. I just don't want to lose more than 50%. So that way you could hold it all the way up here, all the way back down, and then capture this larger movement. So there's benefits to both. Trailing stop losses are safer 100%, but you don't always catch as big of a move. So if you have time and you really trust your TA, your technical analysis, and you've done your research, a limit stop loss could be a little bit better if you're more experienced. If you're less experienced, trailing stop losses are much better for someone that can't stare at a chart very long or doesn't have a lot of experience. Yeah, you might not be able to use them. I don't think you could use a trailing stop loss on Amazon. The bid and asks are too wide, and Tesla I think you could. The open interest in Tesla allows it, so you probably could. But I'd say this all the time. You can't be afraid to take profits with a position. So you, depending on the broker, you should just be able to click on the contract and set the trailing stop loss. Yes, e.g. the trailing stop loss does not follow the price of the stock. I was just using the price of the stock for a visualization of how it works. So let's say this is not the price of the stock, but the price of the option. That would be how that would work. So, but generally, the price of the option in general follows the stock, but the less volatility, there's other things that come into play, like theta decay, time decay, volatility, things like that, all affect the option of the price option of that option. So, it's just one of those things where I try to use simple explanations, but obviously I know a lot of you are more advanced and you get those kind of things. So, alright, what else we got going on here? We're cruising through those things. What kind of questions do you guys have on safe practices? Maybe I can open up to some Q&A here. Not sure if Webull has trailing stop losses. They only have stop limits. I don't think they have trailing stop losses yet. But I know TD Ameritrade and E-Trades do. So with TD Ameritrade, you probably have to do a stop limit. So Zachary, that's how I talk about scaling out. Is you buy multiple contracts, and as it goes up, you can leave runners so that you still don't get FOMO, fear of missing out. So you could take profits that are guaranteed, and then you can leave a couple more run. That way you're securing bigger profits, but you're not losing as much on losing positions. So let's say you did get faked out here. you would sell a couple, but then it goes back up, obviously. You still have some to continue making profits on, but if this would have reversed here, you would have definitely regretted not selling some of your contracts there. Yeah, they do, Danny. I wouldn't go more than... I mean, you gotta understand, I probably wouldn't go more than 10% out of the money, ever. And, I probably would go at least minimum... Oh my, that's some nice droppage on futures. Probably wouldn't go more than, like, minimum you'd want to go is 2 weeks out. Ideally, you'd want to go at least a month out. I don't really use MACD much. What is that? Moving average, divergence, basically. So the idea is, when you're using MACD, you're looking for it to flip over neutral to get in and out. But it's a trick. I don't like it because it's a lagging indicator. But we have been looking into it more for Fortuna, but I've never been able to. I've never been able to integrate it where it's been useful. I decide if it, sometimes you're playing a move that takes time, so as long as it sticks within your expected movement, you can average down to if it takes a little longer. But yeah. Jonathan, I like the smaller companies because I can play more contracts and scale in and out. And it's easier to get in and out of positions sometimes. They don't move as fast, but you can make just as much. Tanya, or Tanya? Is it Tanya? I was saying, in general, you shouldn't go more than 5 to 10% into one trade. So, Danny, I have a whole series on candlesticks. That's literally, I have a whole YouTube series. But you know, you got a gravestone. This is like a gravestone morning star. This is a doji shooting star. This is a bullish engulfing. This is a tweezer, bullish tweezers. This is a bullish tweezers. I mean, I would really recommend. I don't want to get into all of the candlesticks. I would really recommend watching it. It's a fire cycle. I mean, in general, all strategies should be used with strong fundamentals, following your technical analysis with your in and outs. So, ideally, the reason you're here is because you want to learn, and so you're trying to learn those things. But if you don't have that, then you need to at least use some sort of common practice. Like, let's say, I mean, having just general 10 to 20% profit targets per trade, if your TA is weak, is not a bad thing. So if you're good at doing the entries but you're bad at doing the exits, I have a video specifically on tweezers, actually. If you go into my playlists, it's like my intro to technical analysis. But tweezers is a reversal candle, so the candle starts exactly at the bottom of the last candle and then goes back up, and the strongest one is an engulfing, so the other candle, like this one, fully engulfs the previous one. But yeah, futures look like they want to dump again. I would say in practice you'd want a delta over 50 to ensure good profits, and we actually use delta with our options auto trader to take positions. Yeah, I mean, you may miss out on 100% gains, but if you're 90% win rate with 10 to 20% gains, you're going to be highly profitable. I personally go off the price action of the stock, but there's a lot of people that go off the value of the option. it's easier. Let's say you pick your entry bet. It's easier to take a 10% loss and get back in than to watch it go down 50% and never go back up, and then you're cutting it to 50%. So there's two different theories. I personally usually use my technical analysis and follow that, and that's why I hold things longer than, say, Avery and other folks do. And sometimes it works and sometimes it doesn't. You know, I take losses just like everyone else, but if it's a 5% portfolio, 10% portfolio, taking a loss on that is easier than taking a loss on, say, a 30% position, because you know you can make it up in the long term. So it's really, it has to come down to your personal style. You need to know what you're comfortable with. If it's money that you're trying to grow, you should have tighter stop losses. And if it's money, let's say it's your retirement account and not a fun investing account, you need to have tighter stop losses and tighter take profits, because you'll be more consistent that way. So I'm sure Michael still has some of his puts, but I guarantee you he's taken some profits, because he's probably scaled out as it's gone down, because he's a smart person. He wouldn't hold them to zero. But let's see how NQ is doing. So I'll continue answering common practices, but I don't really, kind of been feeling like I have vertigo lately, so I don't want to do a whole lot of charting tonight. But this looks really, actually, yeah, you can see the Batman here already. I am the knight. Ha! This is probably going to do this. Na 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 na. Batman. Yeah, it's a double top. So this is a double top, head and shoulders. So I nickname things fun because I like to have fun. So this is a double top. So you have a one top here and a two top here, making the ears of the Batman, as I call it. The technical term is called a double top, though, 100%. So ideally, and then you're going to get a head and shoulders here. So what's probably going to happen is this will, hold on, I'll probably do this actually. Probably do this. And then from there, you know, it'll do what it wants there. The Batman, aka double top, is a very strong formation. It is extremely strong and very reliable. So there is another Batman right here, and look how that played out. This is a Batman right here, and that played out down to here. So I have a whole video on double tops. I really recommend going through it. In general, I make my videos very short, 3 to 5 minutes. There's a couple around 10 minutes because they're worth it. But I really think if you're new to investing or new to technical analysis, start with them. I try to make them as easy as possible to learn. Kazakhstan, I was just talking about how you don't put your portfolio into all one position. And if you're putting it in skills, that thing doesn't look good. It looks like it wants to come back down to 14. I mean, you got a head and shoulders, you got a diamond. This thing is gonna go. I'm sorry to tell you that. It doesn't look good. It looks. I mean, if skills gets under 15, it's probably going down to 13ish. You guys really gonna make me link my own videos? Hold on, let me find it for you. Alright, so that would be uploads. I'll find it. You guys want the double tap? Here we go. I found it. Here you go. That's the double top video right there. Oh, I turned my music off. Hold on, let me get some music back. Da 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 da. I mean, depending on how much time you have on it, I think skills is mega shorted too, so. Alright, so that was the important part. I'm going to play some fun music now that I like, I'm interested in. Alright. LMT looks interesting. I like defense stocks in general right now. So let's go back to futures. Probably gonna go. Oops, that's not the right one. Hey, it looks like Starry Night. I do not like SE as a company, by the way. I want you to know that. Let's check back with this. Let's see if this plays out in a few minutes. You weren't joking though. That looks really good. Hey, Callie, how you doing, boy? Now this looks good. I'll give you that. It looks pretty. A company doesn't suck. They just lose a ton of money, so I get scared about. I get scared that you're gonna go in heavy, and then all of a sudden, you know, this is a cup and handle almost. That looks really nice. Yeah, let me look into fundamentals on this. So, yeah, Dallas, you're probably doing okay. The problem with it is they just lose. When you look at profitability ratios, and they're all negative, and I mean they have negative 45% margins. Negative 45% margins. Callie wants to hear about the new bot that we made. It's done. We made it. It's done. It goes into testing this week. So I know you guys have been teasing it with the Oracle. We made a new alert bot called the Oracle that we're going to start testing out this week. The balance sheet is okay. And the revenue's increasing. There's a reason why people like this, is because the revenue keeps going up, but they've missed estimates almost every time on their earnings though. They lose a ton of money, but you know, it's typical, so. Yeah, the TA is solid. My short on it worked out really good too. You can see I had it shorted here. Came right down to my target. Bounced off my lines almost to the T, and then it, you know, bull flagged there, and it's been off to the races. So the Oracle bot that's been talking to everyone is not the actual bot that we made. We actually made a new way. Me and Avery together worked on a new way to interpret flow that should be insane win rates. So we're going to be testing that out for a select few, and then when we get some data on it, we'll make it available to subscribers. But that's not the exciting part. I actually finished the algorithm for something that I've been working on for about 6 months that I'm extremely excited for. It's kind of the reason I made the Discord in the first place. It's the TC method, the TC score, Tom's confidence score. If you're old and we're one of the originals, you heard me talking about the TC score, basically a probability score to tell you whether or not something's going to work out. I have figured out how to add it to alerts, so when a flow alert comes out, it'll tell you the likelihood of that flow alert being profitable. And that could be used in two ways. It could be used whether you want to go in on it, or it could be used how much allocation you put in, or it could be used on how quick you take profits. So for instance, when we were testing it, basically if it's a lower confidence score is what we're going to call it. The lower the confidence score means it's basically going to be a quick trade. So we're only going to use it on the Oracle at first to test it out, and then if it works really good, we'll roll it out to all flow alerts. And then if from there we might roll it out to everything eventually. We'll see. But it's something I'm really excited about. I still have to code it. So I just finished the algorithm for it, but then I have to put it into code and put it on everything. But we're gonna try it out once we get it done on the Oracle and testing. I'll give you updates on it. But let's say something had an 80% confidence score, you'd feel probably better about going into it. You'd feel better about holding it longer. But the alert could still be good. But you may just want to take profits faster. So if you're TA and your technicals are good, it might make a small move and you're like, you know what, that's good. The confidence score is a little lower. I'm going to take profits a little faster. So, yeah, I mean, there's a lot of exciting things we're working on. I have a lot of projects in the pipeline. Some of them take longer than others, so sometimes we get massive updates, sometimes we get little updates. So, that's just something we need to do. So, I do have a new flow alert ready to go. We just need to make it available for everyone, and that's where you can look for flow back the last couple hours or whatever. So that should be ready by open tomorrow. So anyways, let's go back to futures here. I do really agree with you here. You can see with the volume profile, if it breaks out of this, I mean, you could probably just go with the volume profile right there. Over 247 and this thing could really go. Let's look at futures one more time, and then I'm probably gonna relax the rest of the night. Yep, it's futures pretty red now already. All you guys freaking out in the beginning were like, yeah, Nick, I like to do things right. So yeah, futures always affect the market. Futures is the market. It's a way of looking into it. A little way to look into it in the future, they call it. But anything can change in the morning. This is just price action, so market will be okay. Yep, there you go. You got your Batmans, double tops, good to go. So, alright, I think that's going to be a shorter one for me tonight, but I appreciate everyone joining, and hopefully you learned a little something. And if you want to spend some more time, go through some of my older videos and watch them. There's some really good content in there, especially my TA series and my advanced TA series. But hopefully you learned something that will help you make a little bit more money tonight. And if you liked the video, throw me a like. That always helps out. So we'll give you updates on all the new stuff and let you know how it's going. You want me to look at the dollar? I'll look at the dollar real quick. Ooh. That dollar's bull flagging pretty good, isn't it? So, if we continue the trend of inversing the dollar, that would mean we're going to have a bloody Monday, Tuesday. And then we should potentially have a green end of the week. We'll see, though. We'll see how I'm feeling. If I'm feeling good, I'll be on live tomorrow. Yeah, that's a cup and handle on the dollar. Alright, have a good night, everyone.